There's a lot happening in markets right now, so let's walk through 4 things that actually connected, starting with the story that's dominating financial media for weeks, SpaceX. SpaceX reported earnings, and despite what several outlets called strong underlying results, the stock initially sold off hard, down as much as 48% from its high. On its own, that's not unusual. A stock can fall on good numbers if investors had priced in even better ones, or if forwarded guidance disappoint. Earnings moves are about expectation versus reality, not just the headline print. Then a second event landed on top of it, a share unlock. When a company goes public, early investors and employees are usually restricted from selling for a set period, the lockup. When that expires, a large new supply of shares can hit the market at once, and more supply against the same demand typically pushes price down. That's a structural mechanic, not a verdict on the business. After the unlock passed, SpaceX briefly reclaimed its IPO price before wavering again as the broader market pulled in different directions. Coverage also noted that the wave of retail buying, which followed the initial drop, appears to have cooled as the stock approached that IPO level. At least one Wall Street analyst was quoted warning against what's called bottom fishing, trying to time a purchase near what looks like a low. It's a real term and it describes a real risk. A stock can always fall farther before it recovers, if it recovers at all. Now zoom out, because SpaceX isn't happening in isolation. The Federal Reserve backdrop is shifting underneath. A recent jobs report showed a decline in payrolls alongside a drop in unemployment rate, a mixed picture that's casting real doubt on whether the Fed hikes in September. Bloomberg reported frames this as a genuine split. One camp argues that Fed needs to hike anyway to reassert its inflation fighting credibility. Another camp points to the soft labor data as the reason to hold off. Nobody outside the Fed knows which way that goes, and the Fed's own projections, when they update them, are only forward-looking numbers worth attaching to the debate. That uncertainty is showing up directly in the bond market. The Treasury has auctions running this week across a 6-week bill, a 3-year note, a 10-year note, and a 30-year bond. Auctions like these matter because the yields that come out of them, essentially the interest rate the government pays to borrow, ripple into mortgage rates, corporate borrowing costs, and how attractive bonds look next to stocks. With trader anxiety already building ahead of upcoming inflation data, this is a week where bond yields are doing a lot of talking. Meanwhile, corporate profits are telling a very different story. Multiple reports this week describe a corporate profits as booming, on pace for the fastest growth since 2021. Berkshire Hathaway's own earnings beat expectation, and Berkshire ended a streak of 14 straight quarters of net selling equities, meaning for the first time in over 3 years, Berkshire is not a net seller of stocks in its own portfolio. Its CEO also stepped up its share buybacks to $4.5 billion in the quarter, well above early levels. A buyback is when a company purchases its own shares back from the market, which reduces the number of shares outstanding. That's the mechanic, separate from any judgment on whether it's good use of cash. And filings are giving us a window into what major investors actually did last quarter. Michael Burry's 13F disclosure, a required filing that shows what institutional investors held as a quarter end, showed new positions in Lululemon and Michael Libre. A 13F is a snapshot of the past filed with a delay, not a live signal, and it tells you what someone did, not what you should do with that information. So here's the thread connecting all of it. An earnings report and a lockup moving one high-profile stock by double digits. A labor market that muddying the Fed's next move. A treasury market absorbing a full slate of auctions while it waits for that decision. And a corporate profit picture that's running hot regardless. 4 separate mechanics all playing out on the same calendar, and each one is worth understanding on its own terms before anyone tries to string them into a single narrative.